Let's take a look at the data. The growth rate of 5.5% is slower compared to the first quarter, slower compared to the same quarter last year, slower compared with the government's target for 2019, and slower compared with market expectations. In fact, the second quarter growth was the slowest since the first quarter of 2015 and the second straight quarter of below 6% growth after 15 consecutive quarters of above 6% expansion. Many economists were hoping election-related spending would help boost the economy on the demand side. A narrower trade deficit was also expected to have helped improve growth, but whatever effect that might have had was wiped out by an 8.5% contraction in capital formation, the biggest such contraction since 2012. There was simply no investment in the second quarter. Government efforts to ramp up spending after the delayed passage of the 2019 national budget also fell short as public spending growth came in lower compared with the first quarter. Socioeconomic Planning Secretary Ernesto Pernia laid some of the blame on the election ban on new projects. He also claimed growth would have been 1 percentage point higher if not for the budget delay. Services, the main workhorse of the Philippine economy, did not disappoint, expanding at 7.1%. Farming was a surprise. Despite crop production contracting the most in 3 years, farm sector output remained positive at 0.6%. The poor showing was blamed on dry conditions related to the El Nino phenomenon. Industry growth, that fell to 3.7%, the slowest since the fourth quarter of 2011, dragged by consecutive contractions in manufacturing production. Secretary Pernia has been urging lawmakers to pass much-needed economic reforms to boost investment in industry, including the easing of restrictions on foreign participation. Without these, government expects manufacturing output will likely remain muted in the near term. Construction growth, also under industry, contracted for the first time since 2014. This includes public and private construction. That's a bad sign for the Build, Build, Build initiative. This is disappointing since momentum was strong coming into 2019. Construction growth was at a 5-year high in the last quarter of 2018. Now, there is a silver lining. Despite all of these disappointing developments, the Philippines still has one of the faster-growing economies in the world, and it is expected to outpace most developed countries this year. The government's goal for growth in the second half is at least 6.4%. For Dissecting Data, I'm Warren de Guzman.